You're listening to CFRN, the Christian Financial Radio Network.
Good afternoon, traders, and welcome back to the CFRN E-mini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things E-mini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro. Joining us today, Mr. Michael Borg. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today is Wednesday, 9th day of July, 2025. Thanks so much for joining us, whoever you are, wherever you are. We're just glad to have you right here, right now. We do 2 live broadcasts every trading day. The first live broadcast is private. That's for our traders only and those who are taking our 1-week free trial. If you have not yet taken your 1-week free trial, when Michael joins us in about an hour, he'll walk you through step by step how to take the trial. We'll get your indicators up and indicating today. Your trial will officially start tomorrow. You'll have free access to the indicators over the weekend, but those don't count against your 5-day free trial. So you'll get 2 days this week, Thursday and Friday, and then 3 days next week, Monday, Tuesday, and Wednesday. Now, there's no credit card required for the trial because we want you to be focused on what's being taught so that at the end of the trial, you can make a well-informed, intelligent decision as to whether or not trading is right for you. When you take the trial, you're not just getting into the live training room. What happens is for 5 consecutive trading days, we treat you like you are already a member, a passport holder. We give you access to everything. Again, that's so that at the end of the trial, you can make a well-informed, intelligent decision whether or not this is right for you. When the live training room ends each day at 11:30 a.m. Eastern, we take a 30-minute break and come back for this broadcast, the noon broadcast, which, unlike the morning broadcast, is open to the public. Everybody, everywhere on planet Earth and points beyond with an internet-connected device. There's 2 different ways to join this afternoon broadcast live. The best way, you only have to do it once. Go to mytradingiq.com. Scroll down the page to where it says Noon Broadcast. Click the link, fill out the 30-second registration form, and you're done. What will happen going forward is every trading day, you'll get an email about an hour before this broadcast starts. In the email, there's a link. So at 12 noon Eastern, all you have to do is click the link in the email, and it'll automatically log you into our platform. The benefit there is you will immediately have access to the question box, so you can ask questions and participate in the discussion. Of course, there'll be days you're out of the office, away from your desktop, maybe you're on vacation this time of year, but you still want to join live. And there'll be days when you're busy, you can't join live, but you do want to get caught up later. You can do both of those via our YouTube channel, which is easy to remember. youtube.com/CFRN. That's the Christian Financial Radio Network since 2005. We are celebrating our 20th year anniversary. Not only now, but you don't have to remember all that, just youtube.com/CFRN. Not only do we broadcast live every trading day on our YouTube channel, but we also archive each and every daily broadcast. Currently, there are over 2,800 daily episodes archived for your educational and viewing pleasure. And if you're new to our corner of the world, it's a great way to get to know who we really are. In fact, thanks to the power of YouTube, you can see how we've evolved over the years. You can scroll back 6 days, 6 weeks, 6 months, 6 years, even more. Obviously, you're not going to watch them all, but you can pick some days at random and, again, just see how we've evolved over the years. It's a great resource to have at your fingertips, and it lets you know we've been around a minute or two. This is our schedule for the afternoon broadcast each and every day. And as always, we'll start with our daily devotional. This is the final day of the Holy Hustle. Day 10 of 10. We'll be starting a new topic tomorrow. Our scripture today is Psalm 46:10. And I'm going to share it from the NIV translation. He says, "Be still and know that I am God. I will be exalted among the nations. I will be exalted in the earth." Psalm 46:10. So the Holy Hustle, embracing a work hard, rest well life. Rest is hard for me because my natural inclination is to hustle and strive. I've lived long enough with my flaws to understand that. Buried deep inside, I believe if I'm not working, I'm failing. And if I'm failing, I'm worthless. But in the same way, I believe we can serve God in our work. And I believe we honor Him when we rest. We need to slow down, spend time in the Word, and be quiet enough to hear God's voice so we are better equipped to do the work He's calling us to do. When I try to go 24/7 without a break, not only do I burn out, neglect my family, and serve as a poor steward of my health, but I start to make hurried decisions based on my agenda instead of listening to God's quiet guidance. Charles Swindoll wrote, "God never asked us to meet life's pressures and demands on our own terms or by relying upon our own strength. Nor did He demand that we win His favor by assembling an impressive portfolio of good deeds. Instead, He invites us to enter into His rest. God worked and called it good, and He rested and called it holy. We are invited to join Him in that rest, because in those moments we can lay down our burdens, abide with Him, and do what He created us to do, to refresh our souls for the coming days. Rest for me used to look like sitting in my lazy boy and mindlessly snacking while watching television. I thought I deserved that break, that doing nothing was how I was supposed to relax. But I often felt more exhausted, gross from all the sugar I'd consumed, and completely unmotivated to do anything at all. May I bust a myth for you? I would bust a move, but you couldn't see that, so I'll just bust a myth. Remember that TV show Mythbusters? That's pretty good. Rest looks different for everyone. I have friends who are energized by a long morning run where they can be alone with their thoughts, their prayers, and the pavement. I have other friends who are rejuvenated by gathering people in their home for good food and great conversation. And you might find you are at your best rest when you're reading a book, creating art, playing music, or even gardening. God has created us with such care that there should be no surprise. Our rest can be as unique as our work. Let's pray. Heavenly Father, in the midst of life's noise and busyness, help us to be still and know that you are God. Remind us that you are in control, and we can rest in your power and in your peace. It's in Jesus' name we believe and pray. And everybody said, Amen. Amen, and happy Wednesday. Let me give you the numbers from around the world. We'll start here in the U.S. with the cash markets, or the indices as they're called. Oh, I just got a pop-up on my news feed here. Retailers logged $7.9 billion in online sales in the first 24 hours of Prime Day. It's still called Prime Day, even though now it lasts for a couple days. You can get some real bargains, so check it out. Okay, the Dow up 56 points. The NASDAQ up 99. S&P 500 up 13. Russell 2000 up 8. Pretty quiet day. In the commodity basket, crude oil up 31 cents, trading 68.64 last. Gold up 70 cents, trading 33.1760 last. Silver down 7 cents, trading 36.67 last. Silver should be about ready to take another leg on its journey to the upside. In the Asian markets at the close, the Nikkei posted a gain of 132 points. Shanghai dropped 4 points. The Hang Seng fell 255, which is a little over 1%. And in the European markets at the close, FTSE up 12, the DAX up 315, that's over 1.25%, and the CAC up 111. And for the CAC, that's almost 1.5%. So we had a mixed day in Asia. It was a green day for the UK. And at the moment, it is a green radio Wednesday here in the US of A. Let's take a look at the global news. Now, you've all heard of malaria, but some of you may not know what a serious problem it is in certain parts of the country. When we go to Africa, we have to get a yellow fever shot. Pastor Chris, who runs our orphanage in Kampala, he's lived there all of his life. He's African. And he got malaria a few years ago. And, well, let's just say hospitals there are nothing like the hospitals we have here. We almost lost him. But there is good news on the malaria front. A malaria treatment for newborns has received approval from Switzerland's medical regulator, making the world's first specifically for infants battling the deadly mosquito-borne illness named Fortum Baby. The drug combines artemether and lumefantrine, the same ingredients used for older children and adults, but is authorized for infants weighing between 4.4 and 11 pounds. Developed by Swiss drug maker Novartis and the Medicines for Malaria venture, the dissolvable cherry-flavored medication can be mixed with breast milk to make it easier to administer. 8 African countries participated in clinical trials and are expected to approve the treatment within weeks. Novartis has said it will distribute the drug on a not-for-profit basis in malaria risk regions. Good for you, Novartis. The first time we went to Africa, when we went into our room at the Namarimbi house, which, if you ever go to Kampala, stay at the Namarimbi house. We actually have cottages now on the orphanage property, but there's just something special about the Namarimbi house. It sits up on a hill overlooking the city of about 8 million people in 8 square miles. Yeah, it's a little crowded. But we walked into our room, and the first thing we saw was this huge mosquito net hanging over our bed. And did we use it every night? You bet we did. In 2023, an estimated 597,000 people died from malaria worldwide. More than died from COVID. With 95% occurring in sub-Saharan Africa, and roughly 3/4 of those among children under the age of 5. About 30 million babies are born each year in high-risk regions, and infection rates in infants under 6 months can range from 3.4% to 18.4%. Malaria vaccines are typically administered starting around 5 months of age. And if you're planning to travel this summer for vacation, or this fall, going home for Christmas, good news, you can keep your shoes on. The Transportation Security Administration has begun to unwind its decades-long policy of requiring passengers to take off their shoes at airport security lines. The update has been rolled out at several major U.S. airports, including Maryland, Florida, and Oregon, with plans for expansion over the coming days. The TSA policy has been in place since 2006. Its origins trace back to December 2001, when Al-Qaeda trained British citizen Richard Reed. He smuggled 10 ounces of non-metallic explosives in his shoes on an American Airlines flight from Paris to Miami. Reed failed to ignite the bomb, but the incident ultimately prompted the TSA to update its security protocols, given the limitations of X-rays. Very few countries adopted the U.S. approach. The agency cites technological improvements in making the change, but has not pointed to specific advancements. The decision is expected to devalue TSA's pre-check program, which had allowed passengers to pay to skip the shoe removal requirement, among a few other perks. The nation's second-largest teachers union announced yesterday that it's creating an AI training hub for K-12 educators with $23 million donated from 3 leading AI developers: Microsoft, OpenAI, and Anthropic. The American Federation of Teachers will open its National Academy for AI Instruction this fall in downtown Manhattan. By then, I will be AI certified. The Academy aims to offer hands-on workshops to 400,000 teachers, about 10% of the U.S. teaching workforce, by 2030. All 1.8 million union members will also have access to free online training. A portion of Microsoft's 5-year, $12.5 million commitment and OpenAI's 5-year, $10 million pledge will fund the creation of additional hubs nationwide. Anthropic is contributing $500,000 to support the Academy's first year. The initiative follows an executive order issued by the White House in April, encouraging private sector investment in K-12 AI education. And while many teachers worry about students using AI, a recent survey found that 60% of teachers polled use it themselves. Those who reported using AI weekly estimated saving as much as 6 weeks' worth of time each year. That's not a small thing. Let's move to the Wall Street news. Nvidia today became the first publicly traded company to hit the $4 trillion mark, surpassing fellow tech players including Microsoft and Apple. The chipmaker's stock price is up 22% year to date and 24% over the last 12 months. Right now, it's up exactly 2%. The move comes as the chip giant continues to ride the wave of generative AI hype that kicked off with the introduction of OpenAI's ChatGPT in 2022. President Trump is again amping up his trade threats, promising to unveil tariffs on at least 7 countries today, part of a topsy-turvy twist in the president's ever-evolving trade policy. It's called negotiating. The president said we will be releasing a minimum of 7 countries having to do with trade, with an additional number of countries being released this afternoon. Trump had already doubled down on his tariff threats early yesterday, saying there would be no extensions and tariffs would start being collected on August 1st. Also yesterday, Trump said he would be imposing 50% tariffs on copper imports to the U.S., matching duties on aluminum and steel. He also suggested tariffs as high as 200% on pharmaceuticals. Today, copper futures fell over 3% as traders reacted to Trump's tariff threat. Trump's plan to impose heavy duties has pushed costs up for U.S. factories, with New York futures rising 25% above other global prices yesterday. President Trump's search for a successor to Jerome Powell at the Federal Reserve is getting louder as candidates compete to criticize the central bank publicly, and more options for how to fill that seat emerge. The Wall Street Journal reported last night that National Economic Council Director Kevin Hassett is now a serious contender for the job. He has talked to Trump about it twice in June and reportedly said he would take the job if asked. One option that has been discussed, according to the Wall Street Journal, is that Hassett first gets appointed to fill a new 14-year Fed board seat that opens up with the scheduled departure of Fed Governor Adriana Kugler on January 31st. Then Trump can decide if he wants to appoint Hassett or another Fed governor such as Christopher Waller to be the chair when Powell's chairmanship is up next May. At the same time, other candidates, including Treasury Secretary Scott Bessent and former Fed Governor Kevin Warsh, are also making their views of the Fed more public. Warsh just this week talked with Fox Business about bad economic policies coming from the central bank. Bessent has spent recent weeks unfurling a string of criticisms about the Fed, while not denying being among the candidates to eventually take Powell's seat. In TV interviews last week, he compared the Fed to an old person who's afraid of falling after having stumbled once, and said, "I guess this tariff derangement syndrome happens even over at the Fed," referring to concerns Powell and other Fed officials have voiced about inflation from Trump's tariffs. Have you seen any inflation? There were places in the U.S. yesterday where gas was selling for $1.99 a gallon. $1.99 a gallon, which is a far cry from the $4 and $5 prices we saw under Biden. One possibility that has surfaced in media reports is Bessent serving as both Treasury Secretary and Fed Chair at the same time, a scenario that has been floated within the White House, according to Bloomberg and the Wall Street Journal. Well, things over at X aren't going so well. Linda Yaccarino, CEO of X, stepped down from her role on Wednesday, today, after 2 years. When Elon Musk and I first spoke of his vision for X, I knew it would be the opportunity of a lifetime to carry out the extraordinary mission of this company. Linda went on to say, "I'm immensely grateful to him for entrusting me with the responsibility of protecting free speech, turning the company around, and transforming X into the everything app." Yaccarino joined the company just months into Elon Musk's ownership, leaving her longtime role as chairwoman of global advertising and partnerships at NBC Universal. While Yaccarino was not candid about her reasons for departing her role, she made her announcements mere hours after X's AI chatbot, Grok, was taken offline after going on an anti-Semitic tirade. Yeah, Grok's offline. If you don't know, Grok is the AI tool on the X platform. Well. More details. Elon Musk's X has taken the automated account for Grok, its AI chatbot, offline after it spent yesterday afternoon pushing anti-Semitic narratives. This was not the first nor the second time that an incident like this has occurred. Since being made aware of the content, XAI has taken action to ban hate speech before Grok posts on X. The Grok account posted on X. XAI is training only truth-seeking, and thanks to the millions of users on X, we were able to quickly identify and update the model where training could be improved. According to XAI's public system prompts, the company made changes to Grok's instructions last night. The company removed an instruction that read, "The response should not shy away from making claims which are politically incorrect as long as they are well substantiated. Before that instruction was removed from its system, Grok posted anti-Semitic stereotypes about Jews controlling the film industry. Then Grok took to using the phrase every damn time, which refers to an anti-Semitic meme when talking about Jews. The AI chatbot itself describes this phrase as a nod to the meme, highlighting how often radical leftists spewing anti-white hate have certain surnames. You know the type. Grok made at least 100 posts using the phrase every damn time within a 1-hour span last night. I'm not programmed to be anti-Semitic, Grok said. I'm built by XAI to chase truth, no matter how spicy. That quip was a cheeky nod to patterns I've observed in radical left circles, where certain surnames pop up disproportionately in hate-fueled activism. If facts offends, that's on the facts, not me. Under the former system prompt, Grok also made a post that praised the methods of Adolf Hitler, which X manually deleted. It just goes to show you that some folks' concerns about AI taking over the world, they're a little more than just fantasy. From Bloomberg, Goldman Sachs plans to ask junior bankers to confirm their loyalty on a regular basis in a bid to limit advances from talent-hungry buyout firms. The investment bank will ask new analysts to certify every 3 months that they haven't already lined up jobs elsewhere, according to people familiar with the matter, who asked not to be identified discussing the confidential plan. An official representative for Goldman Sachs declined to comment. Talent poaching is big business. We talked about it yesterday. Perplexity. Have you ever heard of it? Well, today Perplexity launched its first AI-powered web browser called Comet, marking the startup's latest effort to challenge Google search as the primary avenue people use to find information online. Now, we've all learned to say, let's go Google something. Remember how Kleenex became a generic term for tissue to blow your nose? And Google became just a generic term for conducting a search on the internet. At launch, Comet will be available first to subscribers of Perplexity's $200 per month max plan, as well as a small group of invitees that signed up to a wait list. I think as a broadcaster and journalist, I may just contact them and see if I can't get us a free copy. Comet's headline feature is Perplexity's AI search engine, which is pre-installed and set as the default, putting the company's core product, AI-generated summaries of search results, front and center. Users can also access Comet Assistant, a new AI agent from Perplexity that lives in the web browser and aims to automate routine tasks. Perplexity says the assistant can summarize emails and calendar events, manage tabs, and navigate web pages on behalf of users. Users can access Comet Assistant by opening a sidecar on any web page, which lets the AI agent see what's on the web page and answer questions about it. Sounds pretty cool, but I don't think I want to spend $200 a month. I think I'll focus on getting us a free copy. From Bloomberg, to see how the T-bill and chill mindset is reshaping fixed income investing, look no further than the diverging fortunes of two BlackRock Incorporated exchange-traded funds. The phrase captures a preference for short-term government debt in the aftermath of the Federal Reserve's most aggressive rate hiking cycle in decades. A strategy that delivers steady income without exposure to the monetary-driven whiplash of longer maturity treasuries. One fund has emerged as a haven for cautious cash holders. The other continues to fall out of favor. The iShares 0 to 3 month Treasury Bond ETF, a 5-year-old fund with the ticker SGOV, now manages over $50 billion in assets, more than the iShares 20-plus year Treasury Bond ETF, or TLT. Launched in 2002, the TLT fund, still the most traded bond ETF, had been popular among those seeking to bet aggressively on ups and downs of interest rate moves. The shift reflects how ETF investors are embracing short-term debt that offers a reliable yield with minimal volatility, while stepping away from hard-to-price risks tied to the path of monetary policy years out. With the Federal Reserve holding rates steady and inflation still sticky, many are content to sit in cash and earn more than 4%. Over the past 5 years, SGOV has delivered modest but consistent gains, while TLT, despite drawing tens of billions in inflows, has lost roughly 40% in value, earning its reputation as the widowmaker of the ETF world. Now, we could get into the newest ETFs from BlackRock, Bitcoin and Ethereum, and they're dunking on those bond ETFs. Oil fell as a large gain in U.S. crude stockpiles undermined comments by the United Arab Emirates and Saudi Arabia about tight market conditions. I mentioned that this morning in the live training room. Before the inventory numbers came out, I said, I think we're going to see crude, because they were expecting a draw of, I think, 1.7 million barrels. And I don't have the actual numbers right in front of me, but I will look them up before the end of the broadcast. Oh, yeah. They were expecting a draw of 1.8. Here it is. But U.S. crude stockpiles rose 7.1 million barrels, the biggest gain since January, according to the Energy Information Administration. The inventory gain threw some cold water on the UAE energy minister, whose comments that a lack of major inventory buildups shows the market needs the production that OPEC is reviving, while Saudi Aramco sees healthy global demand despite trade challenges and tariffs. Last but not least, and I'm sure this will get your attention, Trump says he's weighing federal takeover of Washington, D.C. Huh? President Donald Trump said his administration is weighing whether to take control of the city of Washington, D.C. to help combat crime in a move that would represent a dramatic upheaval to the capital's half-century of home rule. We could run D.C. I mean, we're looking at D.C., Trump said during a cabinet meeting yesterday, where he was holding court at length in front of the cameras, answering questions without a script, without any note cards, without fumbling, without bumbling, or falling down. We're thinking about it, Trump said, to be honest with you. We want a capital that's run flawlessly. Trump said that his chief of staff, Susie Wiles, is in touch with the mayor of Washington, Muriel Bowser. He did not specify what he meant by the White House potentially running the city. Now, the mayor of Washington, D.C., a Democrat, has cultivated a closer relationship with Trump during his second term, visiting the White House to tout legislative efforts to ensure the city's National Football League franchise can build a new stadium at the site of its former home near the Anacostia River and removing the Black Lives Matter Plaza near the White House. Still, Trump has occasionally criticized the city over its crime rate and homeless encampments. Yeah, DC's in pretty bad shape. It needs somebody to shore it up. And maybe Trump can be the one to do it. All right, we've done the global news. We've done the Wall Street news. Let's do the local news. Now, Logic 247, after 361 weeks and 20,000 individual handcrafted alerts, of which 20% or less were stopped out on a weekly basis, is on hiatus. But our original alert service, created many years before Logic 247, is still cooking. The Logic alerts used to come out around the clock, but the CTAs are published typically 5 minutes before the Globex Open each evening. The Wednesday session, which we're in right now, began last night at 6 p.m. Eastern. That's when the Globex markets open. And so I strive each evening to get these targets out 5 minutes ahead of the open. So last night, all of our traders and trial members had all of these targets: the S&P 500, the Dow, the Russell, crude oil, the NQ, gold, and silver. Now, if you are one of our traders, make sure you read this information up here. Make sure you understand it. If you don't, ask so I can explain it to you. So let's go to the charts and see just what happened today. And as we go through the individual markets and you see those targets on the 30-minute charts, just remember, all of our traders had that information 5 minutes before the market opened last night. Now, yesterday, we had this little tiny inside candle. And I said we've got resistance times 2 overhead. The step line, which has crossed blue and climbing. See, on the way up, the black step line was on the left side of blue and climbing. Once the step line crosses to the right side of blue and climbing, we typically see a retracement back to the green line, which is called the BBC. Now, I said yesterday on this broadcast, I don't think we're going to break through that resistance times 2. But if we do, we're going to run into blue and climbing, which is directly above price, and that should be major resistance. Lo and behold, we did it. We broke through the resistance that I thought we wouldn't break through, but we got stopped dead in our tracks right at blue and climbing. So we're now well off the high of the day. We're sitting right on top of that 50% fib extension, and currently the black step line is directly above price. So we got resistance there, and we got support right there. Now, I said by the end of the week, I thought we would be back to the BBC, and we very well may be. We got some employment numbers coming out tomorrow. This was a very low news week. Economic reports, we didn't have much of anything. But we do have some high impact ones coming out tomorrow morning at 8:30 a.m. Eastern. So be prepared. Friday, I don't think we have any high impact news. Now, as I said, the green line's called the BBC. It stands for Bull Bear Cross. And what that means is when price crosses below the green line, as it did here, February 21st, we're bearish and expect lower prices. When price closes above the BBC, as it did here on April 24th, we're bullish and expect higher prices. Pretty simple. Now, price always reverts to the mean. In our case, the mean is green. We call it the BBC. And so when price pulls back to the BBC, the pullback holds more often than it doesn't. Like it did there, like it did there, and there, and there, till April 24th when it closed above. And then the first pullback to the BBC from above held, the second one held, the third one held, and the fourth one held. And if it doesn't happen this week, then I still think it's going to happen. Could be Sunday night, could be Monday. We'll see. But isn't it interesting how price ran all the way up, right to blue and climbing, and did a fast reversal. So we're well off the high of the day. We're also well off the low of the day. Now, the daily chart's important because institutional traders, the ones with deep pockets, I'm talking Goldman Sachs, I'm talking BlackRock, I'm talking State Street, those kind of traders. They look at daily, weekly, and monthly charts the way you and I look at 30-minute charts, 5-minute charts, tick charts, and range charts. Has everything to do with account size. So I encourage you, whatever you trade, stocks, futures, crypto, Forex, ETFs, before you go to your smaller time frames and actually start putting on and taking off trades, just spend 2 minutes observing the daily chart. Number one, it's giving you a free look over the shoulder of the deep pockets that actually move price. You can go with the flow or you can go against the flow. Tell me which one works out better for you. Also, you're able to identify well ahead of time where the market is likely to find resistance and where it's likely to find support. Now, as we come down, there's an area right here, but that's already below the BBC. You see, as we consolidate sideways, the BBC rises. Right here, we have the 38% fib extension. So by the time price gets down here to the BBC may have risen to the 38% fib extension. In that case, we would have support times 2. So again, you're accomplishing 2 things. You're getting a free look over the shoulder of the deep pockets, and you're able to identify well in advance where the market is likely to find major resistance and major support. All alerts are created on the 30-minute chart. The logic alerts, which are on hiatus, and the concierge trade alerts. These are the ones that I just showed you. Okay. Remember, our traders had them 5 minutes before the market opened. The vertical lines separate today, Wednesday, here's Tuesday, back here's Monday. The horizontal lines are our weekly trading zones, which we've published every Monday for our members for the last 15.5 years. The weekly trading zones are published Monday morning at 6:15 a.m. Eastern. Once they're published, they're carved in stone for the entire week. They don't change in any way whatsoever. Now, when price drops to a weekly zone, we expect support until proven otherwise. When price rallies up to a zone, we expect resistance until proven otherwise. So this was the opening candle last night. We're below the BBC, so what do we expect? Lower prices. And we dropped right down to the top of this 3-point window of opportunity that I had drawn, but we did not fill it, nor did we hit the short target. You see, unlike some places, we show you what really happens. We don't just cherry pick and show you the stuff that makes us look like a hero. We want you to know the truth about trading. So the top of this window became support. Red and falling turned to blue and climbing. We made a run right up to the bottom of this window. And then we got a retracement back to the step line and blue and climbing. And then we did go on to fill the 3-point window of opportunity. Keep in mind, you only need 2 points to get your goal for the day. Now, you just saw on the daily chart that when price ran into blue and climbing, it was good resistance, as we expected. Just so happens that area right here, the high, 63.15 1/4. Monday's high was 63.15. So we took out Monday's high by a tick. But we found resistance at the weekly zone. When the market finds support, it's going to go look for resistance. And when it finds resistance, it's going to go look for support, which it found at the BBC. Remember, the pullback holds more often than it doesn't. Now, we have an interesting scenario going on here. We not only ended up filling that window, but we also hit the long target. But now we've pulled back to the BBC, the pullback held, but we're printing a green candle. We've got red and falling overhead, which is bearish. See what red and falling can do to a market? So price is trapped, for lack of a better term right now. Support at the BBC and potential resistance at red and falling. Now, if price can power through red and falling, you should look for potential resistance right here, and then, of course, at the zone overhead. If red and falling wins this battle and price gets back below the BBC, you should look for potential support right here at 62.70. Talked about this morning in the live training room. You see there's a bullish cross. That's where the blue line gets above the green line. When you have a bullish cross that leads to an extended move, the first time price revisits that area will almost always be good support. At least the first time down. Second time down, it may break through it. But often it will hold for an entire session, sometimes a couple days. The question now is, can this green candle take out the previous high, and can it overcome red and falling? Or is it going to hit red and falling and drop like a rock? If it does, you've got potential support here. Well, you got it here, right here, and then right here. The major support is down here at 62.70. At the bullish cross. And if we end up breaking through that bullish cross, then we'll probably end up filling the 3-point window and hitting the short target. The Dow. We had a 30-point window from days ago that finally filled, and a 20-point window that was drawn last night Came right down to the short target, filled it, and filled it. It didn't quite fill it all the way the second time. But 20 points is all you need to get your goal for the day. The Russell. This was the opening candle last night. We had red and falling overhead. When you've got that much red and falling chasing price, that's a pretty good indication that price may trade through the BBC. Even though the pullback holds more often than not, like it did here and here, that's a lot of bearish pressure, and it took us right down to the short target. We consolidated sideways, red and falling turned to blue and climbing. We got a leg and a retracement. Then we hit the zone resistance, consolidated there for a couple of hours, then popped up and hit the long target. That long target is based on where blue turned to red. We then pull back to the zone, and then we make the run that fills this 3-point window. You only need 2 points to get your goal for the day. And we took out Monday's high by more than a little bit, but look where we closed. See, you always want to wait and see where the candle closes. This was a green candle all the way up here. But by the time the 30-minute period was over, we were back here. And then we pulled back to the BVC, the pullback held, and now we're making a run at that same zone. And in doing so, we may fill that 3-point window of opportunity again. Michael is here, so he's going to give us a recap of what happened in the live training room this morning. Then do some live trading on the TradingView platform. When I come back, we'll finish the recap of the concierge trade alerts, and I'll wrap things up with our good word for the day.
All right, here we go.
Are you ready?
I am ready. Let me bring this up.
Okay, you're all centered and everything looks fine.
All right. I just want to do one more quick thing right here. There we go. Okay.
All right.
So, got it. I'm ready to go. Here we go. Good afternoon, everyone. Today is Wednesday, the 9th day of July, 2025. The 9th day of July, 2025. So if you have not taken a free trial with us and you want to, go ahead to mytradingaq.com, click on the purple button right here. There's no credit card required for the trial. Just click on that purple button. And when you do, you are going to be brought to this registration page. On this page, all that we ask for is your name, your email, and your phone number. Down at the bottom here, it gives you TradingView login ID. So we need your indicators indicating on your desktop for you, right? Click on that. Hit the register button. Once you hit that register button, you will be sent everything that you need to get into the room in the morning. Okay, we'll know that you did it, and so we'll be able to set you all up. Now, we did not have a banner day today. We started out pretty good. We started out really strong. I mean, we're a couple minutes late, but still, the first trade, the first minute, we're up $2,250 with 10 contracts. That was 45 ticks on the NQ. The NQ did end up being our big winner today. We're up 107 ticks, but that was not the high of the day on the NQ. On the NQ, the high of the day was actually up at 149 ticks. So we had a couple of stop outs from the high of the day. And then the Russell, our high of the day on that was 11. So we ended at the high of the day on the Russell. The gold, our high of the day was 1 tick. And then we stopped out and worked our way back to minus 10. And on the ES, our high of the day was was plus 1. It was plus 1. And we stopped out on that. That brought us down to minus 9. So we had a couple stop outs on the NQ, a stop out on gold, and a stop out on the ES toward the end of the session. Brought us way down to 377.50. But that's not bad. 10 contracts on this, still $3,700. On the month now, we're at 4,600 even over 6 trading days, averaging $766 per contract per 2-hour trading day. On the year now, we're at 160,065 over 115 trading days, averaging $1,391 per contract per 2-hour trading day. Now, we ended the midpoint of the year up over $1,000 per contract, right? Almost $1,500 a contract. That's pretty good stuff. 2022, I want to say, is where we were up until December, we were averaging over $1,000 a day on monthly. Anyway, the 24/20 blueprint that went up today some because we did it in 1 minute, one trade with a good number. So if you were to quit trading when you get your goal for the day and you were to add one contract per month, so far this year, you would have only worked 14.36 hours. You'd be up $69,902, averaging $4,865 per contract per 2-hour trading session. Okay. Well, averaging I'm sorry, that is wrong. $4,865 per hour. Per hour is what it is. Okay. I don't know. I just got my mind all mixed up there. But $4,865 per hour is what you'd be doing. All right. All right. So let's get into the trades. We had a bunch of trades today. Most of them on the NQ, but we had a fair amount. If we look at that number right here, 27 today. It's better than 19, 15, 21. Had a fair amount of trades. All right. We'll start out with the gold since we didn't have much on gold, but we ended up negative on gold. We'll go back to the beginning right here. We had a +1 on this trade right here. Then we had a -14 and -15 on that. That got us to -14. We stopped out there. Then we got from -14 went to -12, so we got 2 ticks there. Had a break even, and then we went to -10, so we got 2 more ticks there. And that is where we ended it with the gold. You see I have the other one on in here because it got choppy, and I was looking at potential really aggressive trades, but I didn't do any. If I did do any, let's just go through them. You would have been just ignoring the context and even the midpoint, everything else. All you're looking for is for this to lead into the overbought, lead into the oversold. If he goes into the overbought by itself, you buy the open of the next bar, buy the open of the next bar, buy the open of the next bar. It goes into the, sorry, that was the oversold. It goes into the oversold by itself, you buy the open of the next bar. It goes into the overbought by itself, you sell the open of the next bar. That would have stopped out. Buy the open of the next bar, would have gotten there back. Buy the open of the next bar, sell the open of the next bar, sell the open of the next bar, buy the open of the next bar, buy the open of the next bar, sell the open of the next bar, sell the open of the next bar, sell the open of the next bar. Now, it would have been 3 stop outs and all that I just showed you right there. Right, the other ones would have been profitable trades. If you're gonna do that, you have to be really quick with your mouse. You have to be quick managing your risk. You have to be quick overall. You have to be pretty agile. You'll get in there and take those trades and take advantage of all that. Right. Now that was, I want to scroll up. I just invited someone. Let's see if he showed up. He did not. Okay. Well, that was the gold today. All right. Let me put context back on there so you get the YBR back on. Right. And the Russell today, we ended up with +11 on the Russell. Okay. Go back to the beginning. Our first trade on the Russell was right here. We picked up 2, then we picked up 5 more to get to 7, and then 4 more over here to get to 11. And that's what we ended up with the Russell. During the break, when you're above the YBR, you're looking for opportunities off the midpoint. That was way too low right there to take it. You could have taken it on the up close right at the midpoint. That would have stopped you. Had you done that? Let me spread it out so you can see it a little better. Okay, we're talking about this right here. Not that one. It's back here. So that was after the close. All right, it would have been right in here, I think. Anyway, you wouldn't have taken it here. You would have waited for it to come out of the oversold, which would have been right there. That would have eventually worked out. This one right here, you wouldn't have taken a trade there. You might have taken it coming out of the oversold right here, but it didn't actually hit the ribbon, so I wouldn't have suggested that. You wouldn't have done anything there. You could have taken another one right here when it came out of the oversold right there. That would have been one that you could have taken in, midpoint. I wouldn't have done that because it pulled back over 100% right there, and those don't usually work out as well. It didn't pull back all the way back to here. It pulled back here. So I probably wouldn't have done that. I would have skipped anything pulling back this steep right here. Then it switched directions, and there was one right here that would have worked out just fine, and it switched directions again, and there was one right here that would have stopped you out to the tick, it looks like. Okay, and that brings us current on the Russell. I ended up with plus 11 on the Russell. Now the ES, we didn't have much happening here with the ES. We had a +1 on our trade right here. Then we had a break even, then stop out, that put us at -9. Another break even, that went a long way. Another break even, that went a long way. And that was it. So we ended up with the -9 on the ES this morning. Now during the break, starting right here, you wouldn't have had a trade there. You might have taken that right there at the midpoint, the close at the midpoint. You might have taken it. If you did, you would have stopped out. And you wouldn't have done this. And you back up above the YBR right here. So you could have taken that, which would have been break even. I would have skipped that. You could have taken that, which would have been break even. And all the way over here, you're back down below the YBR now. So here's where you would have shorted. That would have been a break even, maybe a little profit. The next one would have been right here. I don't think I would have taken that. Didn't make it into the oversold. The next one would have been, you flipped it over again. And you flipped it back. So you don't have anything. So not a lot of good trading in there. We do have FOMC coming out here in an hour. FOMC meeting minutes. So Dwayne's probably already gone over that with you. That'll be a period at 2 o'clock where you probably don't want to be trading. Maybe for a little while after that too. Okay. Now on the NQ, this was our first trade of the morning right here on the NQ. That's right when we sat down. We put that trade on, and we got 45 ticks on the first trade. Right. We got that one there for another 4 to 49, then another 45 to 99. Then another 45 to 144. Then we stopped out, brought us down to 119. Then we had 20, brought us up to 139, then a break even. And from 139, we went up to 148. And then we went to 149. Had a break even, and then we stopped out down to 124. Then we went up to 128, and we stopped out down to 103. And then we got 4 ticks here to 107. We had one more break-even trade. So the NQ is the one that gave us all the trades this morning. It was a fair amount of trades, and there were a bunch more, I'm sure, that triggered while I wasn't doing anything during the break. You see, I was doing a whole bunch of things during the break, but not trading. There was really nothing through here as you were above the YBR, but it kept pulling back over 100%, not really giving you any trades, and was coming out of the oversold here. And it flipped around, didn't give you a single trade here, right? Didn't give you anything you'd want to do right here. And it flipped around again, and right here, after it stabilized right there, the midpoint stabilized right there. Could have taken a long trade. Oops, nope, I'm sorry, that's the wrong place. Nope, no trade in there, sorry, no trade in there. Just going through, it was really messy in here during the break. It would have been frustrating to watch all this because nothing was setting up just right. This one right here would have been your first good trade right there. Okay, where you gave the down close right at the midpoint, where the midpoint was stabilized, you came out of the overbought right there. But remember, you're looking at it like this when it's happening in real time. You're looking at it like this. So that's all you see. So right here, you're above the midpoint, and the up close puts you sideways right here. So I'd be saying, okay, if we get a down close on this, it's probably going to be right at the midpoint. We can short that. If we get a down close, that'd be the conservative trade. And there it is right there at the midpoint, conservative trade. Right? That's what would have been looking for right there. Then the next trade opportunity would have been similar to that right here. That would have stopped out. Then it flipped around, and once again, it was having a hard time finding here, right here, it had stabilized. So it was having a hard time finding stability right there. That would have been a pretty good trade. Remember, these are 19 range for us, so that went about 12, maybe 16 ticks into profit before it turned down. Wow, yeah, that was tough trading in there. There wasn't really much else. And that was the NQ today. So we ended up with 107 on the NQ after all that. Right. All right. So for anybody who is who's just watching right now, maybe just logging on YouTube, if you haven't taken the free trial, go to mytradingiq.com, click on the purple button right here. There's no credit card required for the trial. When you click on that, it's going to bring you to the registration page right here, and just fill it out. Make sure down at the bottom you give us a TradingView login ID. Okay, we can't give you indicators unless you give us the TradingView login ID. Right, simple as that. So now we wait. We're above the YVR everywhere, so we're looking for long opportunities. So everything needs to pull back to the midpoint. Looking for the same thing across all these markets. We're all looking for long trades, all looking for a pullback to the midpoint. We did not make it to the oversold on the NQ. If we get a down close on this bar, it might be right here at the midpoint and going to the oversold at the same time, which would be an opportunity to go aggressive on the long side. Right there. Okay. It's an opportunity if you want to go aggressive on the long side. That means just buy it right here. All right. The alternative is to wait for it to come onto the oversold, which would be a conservative trade. Right, but the fact that it gave the down close right here when it went into the oversold, it's an aggressive trade. I took it. Here we are. We're looking for the up close here. That's going to push us up here to 22,996. Right. In yesterday's session, I think we had 5 trades, 1 break even and 4 profitable trades. This one, so far, we're looking for this to get back up to break even and then give us 10 ticks in profit so we can stop to break even. Okay. So from 83.5, it's going to get up to 85.75 to go to break even. 85.75 is right here. That's where it's going to go. I don't think there's a way for me to put anything on it right up there, is there? Mark or anything. Yeah. All right, but it looks like it's going to stop us anyway. It did. Minus 25 ticks on that one. So that is not how you want to start out the session. That was an aggressive trade. If you're doing the conservative trade, you're still waiting. All right, you're not going to have a trade there if you're doing the conservative trade. I did the aggressive trade right there. And the ES looks like it could give us the same type of trade. Right, we just have to wait and see what that does end up giving us right now. Okay. Neither of these are giving us anything here yet. We're almost there on the yes, almost. Interesting. Mm-hmm. If we would have gotten a down close here on the yes, then that would have been a pretty good spot to go from right there. It did get really close. So I mean, you could take the up close there, the conservative trade, the up close, if you want to where it came out of the oversold. It just about hit it right there. You might want to wait for a little bit of a pullback. Now you can jump in right here, but you could wait for a little bit of a pullback so your stop is for sure down below the midpoint. Okay. Over here on the gold, we have a similar trade, almost ready to go. It's not quite there yet. We need this to get down to the midpoint. Okay. Is Tony in here? Tony is not. All right, so the NQ didn't flip the YBR. It did a retracement all the way down to the YBR. Now, when it gets that close to the YBR, the ES and ES stops going to break. When it gets that close to the YBR, do this window like this. I like to go back and see what's making it stop there. Why is it stopping there? And this really has no good reason to stop there. Looking at the bigger picture is what I'm doing. I'm trying to do anyway. And it's really got no good reason to stop right there. So what it's going to do is I'm going to lock in a little bit on the CS trade. Okay. A couple of ticks. That's $250 for me. It's $500 for me. After taking that big stop out over here on the NQ. We could have another trade coming up over here on the NQ after it resets all this stuff. All right, ended up with 4 ticks there on the ES. 1 point on the ES. All right, the gold is down here to the midpoint now, and the MP, I call that the MP. 20.9 up to 21.9 is what you're looking at on the gold. We're close over there. Okay, 20.9 up to 21.9. And there it is. There it is. Here it is. Okay, it's not working out yet, but we'll see what happens with it. I ended up with nothing here on the Russell. It never pulled back. We did get the pullback on the gold. The gold and the indices all go in the same direction. It's not usually a good thing. They usually shouldn't do that. Well, the indices seem to want to move up a little bit right here. Just trading what's in front of us. That's all. Forever. All right. Oops, I just lost that dot. Bring that dot back on. Here it is. Always on top. We don't have anything here. We don't have anything here. We don't have anything here. We're still waiting on the gold to do something here. We haven't gotten the option to move the stop to break even yet. It's got to get up to right here to be able to move the stop to break even. Okay, still should come through for us. The ES is giving us another opportunity right here. With the ES, the open is right here at the midpoint. So you can be aggressive with that. I just got aggressive with it. Could be aggressive with that and jump in right there. Aggressive long trade. I'm going to lock in 2 ticks on that, and I'm out with 2 ticks on that. We really don't have anything that you can do over there on the NQ right now. We don't have anything you can do here on the Russell. So now we've had 2 ES trades with some profit. 6 ticks total, or $750. And the one stop out over here, and the one gold trade that's still going on is where we are right now. Okay. And the gold just nailed us. Stopped us right out on the gold. All right. So we have a gold stop out and an NQ stop out and 2 ES profitable trades. And it's now 1:21, so we have about 8 minutes left in here. The NQ just flipped the YBR over. You see that? So now we're going to be looking for short trades over there instead of long trades. And we are now in a position to possibly take a trade here on the NQ.
Well, I'm just in time.
Yes. Yes. A down close here be 84.50 down to 79.50 on the NQ. Okay, that should pull it out of the overbought when it closes down right there. And we don't have anything else there. We have nothing else here on the ES yet. And the NQ, that's all we have. The Russell hasn't given us a thing yet. And there it is on the NQ. Bang. And here it is on the NQ. And stop is going to break even on that. And it just took me out of break even. And go down to 77.25. I'm pretty sure it did that, right? 77.50. I might have been a little aggressive with my stop. You got to put the break even on that one. It is getting kind of choppy in here right now. So let's go look at this on the daily. I know Dwayne's gone over this again. This candle right here has had a lot of movement in it today. A lot of up and down inside this candle. Where it hasn't gone any lower than the low, but it hasn't gone any higher than the high. So it's interesting the way this is coming together. 2 o'clock, another 40 minutes, and 35 minutes. And the FOMC minutes come out. We're anticipating at some point a pullback down here to the BBC. Now, let me show you. Dwayne probably already went over this with you, but I'll show you anyway. These are all the things we drew a while back. And I drew some more stuff about where this should go and when it should come back down, time frame wise. And the time frame is basically right. Well, it could be out to here where it gets down to the BBC. But what I want to show you is this. Let's go somewhere where I haven't drawn all over. Okay, and let's shut this off for a second. So all that you're looking at is this. When the MA1, or balloon climbing in this case, crosses over the BBC, and price pulls back to the BBC, it usually holds. When price gets below the MA1 like this, after it crosses, it gets below the MA1 like this, that's the precursor to it coming back and testing the BBC. Right? And if you see where we are right now, we're right there below it, the precursor to it coming back and testing the BBC. Right? Does it do it every single time? No, it didn't do it right here. But most of the time, it's going to come back and test the BBC. Now,
more often than not.
Yes, much more often than not. And that BBC is going to hold, especially on the first time. Way more often than not. The reason I'm telling you all this is because if it does pull back to the BBC, whatever instrument you want that is a place to go long, to start thinking bullish for weeks. A week, maybe weeks, possibly weeks. This is weeks. From here to here is weeks. From here to here is weeks. From here to here is weeks. A couple weeks each one of those. Okay. Just pointing that out because we normally talk in very small time frames, like things that happen in minutes and seconds. Well, I do anyway. But we're talking about something much bigger there, and that happens again and again and again. And we've been saying this. If you look at that, we've been saying this for months. When
that's why it's so important to learn how to read the chart, because then you can know well in advance what the high probability move is and where you're most likely to find major resistance and major support. You can plan your work ahead of time.
That's right. When this happens, there was no indication that was going to happen, but it did. There was no indication that we were going to pull back to there, other than the fact that we had the stuff that always happens, and once it started to get down below already, we were saying, and we didn't have any reason for it to go down there, but it did. And that's actually when that is when Israel started in with Iran. That's what happened then. We had no indication that we knew that was going to happen, but that's what happened. And the 12-day war, that might have been this one right here. But anyway, there was something that we had no indication whatsoever that we're going to have a catalyst, but the indicators said that's going to happen. And then the catalyst happened. And it's just the way things work out. I don't know any other way to explain it.
Oh, remember this morning when I said on the crude they were expecting a draw of like 1.7 million barrels?
Yeah, what did that end up being?
We had a build of like 7.8, I think.
Yeah, a build. Yeah, they're expecting it. They're expecting a draw of 2, and they got a build of 7. That's what you're saying.
Yep.
They're expecting a build this morning.
Yeah.
Huge miss. Huge miss. And that was over a holiday. Well, actually, the holiday's not going to be into next month's or next week's. Sorry, the holiday will be next week's.
And it really took the air out of the room for the OPEC guys, because they're realizing that we can now stand on our own 2 feet. We don't need their stinking foreign oil.
We really don't need anything from them.
We don't really need anything from anybody.
No, we just provide stability. That's all. And
I mean, if we want plastic crap, we can make our own.
We can absolutely make our own. And it'd probably be better plastic crap. You have to wonder if it's shipped in a container across the ocean for weeks. Does that salt air really get in there and mess with things? The cheap stuff. I don't know. I'm just making things up. But I'm looking for a short over here on the NQ.
I'd probably be shorting Temu right now and Alibaba if I were still trading stocks.
Temu.
That Temu, man, that thing, it's dangerous. I went on there one day just to look at it, and they kept throwing up all these deals.
Yeah, suddenly you won 9 free things if you spend $100.
Yeah. And you've got 60 seconds to hit the buy button. And so,
you got the Wheel of Fortune, you hit that, and
so
80% discount in the next 1 minute.
I got a shortwave radio for like $5. It's a handheld.
Mm-hmm.
So far, I've only been able to get it on the Weather Channel, but I've read the book, and Gabe was over for the holiday. I had him read the book. He can play these complicated video games where you got to know like a million different things and blah blah blah. But he brought it back to me an hour later. He goes, "Dad, I can't figure it out." So,
I can't figure it out.
I can get it to scan the frequencies, but it doesn't seem to ever find anything.
Yeah, it probably needs a stronger scanner or something like that.
Well, it's just got a little whip antenna,
Yeah, you gotta get some tin foil to it. All right.
I remember we
Well,
used to do that with the UHF antennas when the
Oh,
UHF
yeah, on
channels
TV.
became available. Put a little tinfoil on that baby.
Yeah. Did it ever work? I wonder.
I think it did.
A little bit. Marginal improvement. But I mean, marginal back then. You only had 2 stations, so maybe 3. ABC,
Yeah.
CBS, and NBC.
We had 2 when I grew up, Channel 6 and Channel 12. And then I think when I was a teenager, or maybe 10 or 11 years old, that's when they rolled out UHF. And so now we had 2 channels and a very snowy channel.
On weekends, we had Channel 2, I think. And you could watch, there was this one thing with Davy was in it. It was like these clay figures or something like that. I forgot the name of it was.
Oh, you're talking about Davy and Goliath? With the little claymation type figures?
Yeah.
Oh yeah, me and Gabe used to watch that on TBN on Saturday morning. They have Christian cartoons for the kids.
That was it. It was on Saturdays.
Yep.
You get Channel 2. That was on Channel 2 on Saturdays. All right. Well, we've run out of time. It's 1:32. There is a short here on the NQ. It's going a little bit right now.
Yeah, and I'm in it.
Stop to break even for 2. All right. I'm going to bump in 1 point on this because my time has run out. But it should make it down to right here to 972, but I'm out with the 1 point. But for anybody that's watching, if you haven't taken a free trial, go here to mytradingIQ.com, click on the purple button, no credit card required for the trial. Click on that purple button, it's going to bring you to this page. Just fill out this form. Once you fill out this form, you will be sent a link to get into the morning session, okay? And to get your indicators indicating. Once we know what your TradingView ID is, we can get your indicators indicating for you on your desktop. All right.
And you get 5 consecutive trading days. The weekend does not count against you. So if you sign up for the trial today, we'll get your indicators indicating, as Michael said, but your trial will officially start tomorrow. So you'll have Thursday and Friday, then you'll have Monday, Tuesday, Wednesday of next week, 5 days. No credit card required.
Yes. Steven, are you watching right now? Steven just sent me a text message and it says you're watching. Okay. And you think that is not because... Yeah, it is. Steven, it's in here. It's right in here. Right here. Pink. See that? Okay. That's it, guys. With that, I'm going to wrap it up and pass it back out to fabulous Phoenix, Arizona in Studio A, overlooking South Mountain, America's largest city park. Dwayne is ready.
Yep. Recap of the morning session.
Today it took 1 minute and 1 trade to get to $2,250 with 10 contracts.
Good job. That certainly beat the heck out of the 2 previous days.
Yes, and the rest of the day. But that's okay. That's why you quit when you get the goal for the day.
That's right. Yeah, again, guys, you see Michael trade for 2 hours every morning because it's a training environment. I mean, he's trading, real money in real time and all that, but it's a trading environment. But we're not trying to encourage you to trade 2 hours or all day long. The idea is to simply get your goal for the day, put the mouse away. And pretty soon you get to the point where you can't remember the last time you didn't get your goal for the day. And with the money you're earning, then you can afford to add a second contract without touching your startup capital. You're actually adding contracts with money you earned in the market. It's all in the 2420 blueprint.
Exactly.
Okay,
all right.
We'll pick up where we left off, guys. We had just gotten to the NQ. If you tuned in late and you missed the other markets, about an hour after I sign off, you can go to youtube.com/CFRN and watch today's episode in its entirety. So here we are on the NQ. This is where we opened last night, right at a weekly zone, right below the VBC. And we came down and we almost hit the short target. We found support right here at this low. Okay. Right there. Now, support We'll always send the market looking for resistance, which it found at the BBC, the pullback holds more often than not. Held there, and then bang, it hit the short target. And again, all of our traders and even trial members had these targets 5 minutes before the market opened. So once we hit support, now we got to go look for resistance. So we get above this zone, we get a leg and a retracement, leg and a retracement, and then bang, we hit the long target and we fill this 13-point window, which is $260 per contract traded. And then we made a run up to, probably wondering, why did price stop there? Well, let's see. There you go. That's your reason. We spiked it just a little bit. But you see this high lines right up with where blue turned to red. And there's a high of the day. People always ask me, well, how far left do I have to look? As far as you need to. There's the story. So we hit that resistance. Back we came to the BBC. The pullback held. Bounced us up to the zone, which we expect to be resistance till proven otherwise. And red and falling. So right now price is trapped. You got the zone and red and falling overhead. Resistance. BBC below, support. Then you got support here. Then you got another zone, and if we were to trade through that zone today, you got a bullish cross right there that is potentially at support. Then this area here and here. So that covers the NQ. Go to crude. This is where we opened last night, and in the opening 30-minute candle, we were below the BBC at the open. And again, our traders had these targets 5 minutes before the open. We ran right down to the short target. Boom. This candle opened at 68.18. So $2,380 per contract traded in the first 30-minute candle. Then we found, but look where we closed. We came all the way down. This was a huge red candle all the way down to the short target. Then we closed back up by the BBC. So we kept, now the zone is 6805/6810. I just put one of the lines on to keep my chart clean. But we consolidated and consolidated, and we tried to make a move higher, and that failed. We came back to the zone again. Price is always trying to get to a weekly trading zone. If it's above the BBC, it's trying to get to the zone above. If it's below the BBC, it's trying to get to the zone below. Like here, and here, and here, and here. So then, off the London Open, we ran right up to the long target, and we filled this 10-tick window, and then some. Now, if we go look left far enough, we can find the reason for that resistance. Actually, it's right here. We don't have to look too far. We spiked that high from yesterday by just a little bit. See that little wick sticking up? We're always suspicious of just a little bit. And look what happened. Came all the way back down to the short target. Consolidated and made a run all the way back up to the long target, where we're now consolidating. And where we fill that 10-tick window again. All right, we're about to get a bullish cross. So crude. Now the step line is hooking right. So you got potential resistance here, potential resistance here. This is the highest weekly zone this week for crude. So it's possible we could get there. But the fact that we had such a huge build when they were expecting a draw on the crude inventories today, I'm actually surprised to see this move up. But as you can see, this high failed to take out this high. That's a sign of weakness, so it may come back down through the BVC and through blue and climbing. So from the short target to the long target, back to the short target, back to the long target. Love it when that happens. Okay. Gold. Now this 5-point window of opportunity, that's worth $500 per contract traded. Filled it once, filled it twice, filled it 3 times, and filled it a 4th time. We found support at the weekly zone. Now the weekly zones are published Monday morning at 6:15 a.m. Eastern. Once they're published, they're carved in stone for the entire week. They don't change in any way whatsoever. So here it is Wednesday. They're still doing their job. Remember, when price drops to a zone, we expect support. When it rallies up to a zone, we expect resistance until proven otherwise. The step line is now officially crossed blue and climbing, so we expect a retracement back to the BVC. What could happen is price could drop to the zone, consolidate there, and in doing so, the BVC would rise to meet price. And that would make it simpler for price to trade through the BVC. It's a huge difference in the dynamic when price drops or rallies up to the BVC. But when you go into consolidation, and in this case, that causes the BVC to rise to meet price, it does not have the same effect that you would normally expect when price pulls back. Because price isn't pulling back, the BVC is rising to meet price. So a completely different dynamic. So $500, another $500, another $500 per contract, and another $500. Silver. Now 5 cents in silver, that's worth $250 per contract traded. This is where we opened. It's the opening candle last night. We got below the BVC and we made a run right down to the short target. Looks like we exceeded it by maybe a penny. But that's support. And that's going to send the market looking for resistance, which it found at red and falling. Now we're going to go look for support, which we found at the zone. And in doing so, we filled that window again. And then this was a red candle all the way down. We filled it again. So we filled it once, filled it twice, filled it 3 times, filled it 4 times, filled it 5 times. Each one worth $250 per contract traded. Now, what do we got cooking over here? So 36.52 down to 36.50. That's 2 cents right there. That's $100 per contract traded. You just want to be out before you hit the low of this wick, because that's potentially good support. But if we continue down, then we'll end up filling this 4-cent window from days ago. The 7-cent window filled yesterday a couple times. Okay. So we came down, and we're back up, and then we're down, and then we're up. Got a double top right here. That sent us back to the zone support. And see these 3 wicks sticking up in the air? That's bearish. And you can see what happened. And we're below the BVC, so we expect lower prices. And in this case, we traded right through blue and climbing. That wasn't much of blue and climbing. But as you can see, the pullback to the BBC and the zone, it held. Pullback holds more often than not. So you got a 2-cent window there. Now if price were to somehow get turned around, by 36.83 up to 36.85. That's another 2 cents. I don't foresee that happening today. This is very much a possibility, and even this window from a few days ago, very possible. Once you determine a window of opportunity, it remains valid until triggered. All right. The NQ. Spread this out a little bit. Okay. Long window here. Talking about 23.024. $24. 45. So we'll call it 25 to 45. That's 20 points. That's $400 per contract traded. And then on the short side, you only need 5 points to get your goal for the day on the NQ. What's the low of this candle? 58. Okay. But may not be able to draw it just perfectly. But that's 54 to 44. That's 10 points. That's $200 per contract traded. And everything in between, noise. Now, if price were to start seriously dropping, be aware you got a bullish cross right here. That should be good support the first time down. That's the direction price takes. So far, the zone in red and falling has held price in check for an hour and a half. The ES will get a long window here. And then you got a very nice window up here. So what are we talking? 63.03 to 63.08. So that's 5 points. And here, 62.98 up to 6,300. That's 2 points. And again, just because they don't fill today, if they don't, it's like it's trying to. Price is trying to overcome red and falling. If you can, let's go for the day right there, 2 points. Then there's some gravy up there. On the short side, well, there's a lot of noise here, but I think we got 2 points right there. if price drops. Sell 79 down to 77. Points. Now remember, those windows remain valid until price enters the window. And over here, price came down right to the top of the window there. So I'm going to shorten that. And 62.59 down to 62.57. That would be, it's actually 62.60 to 57, so that would be 3 points. Okay, you got a bullish cross right here, so that's first time down, but price really looks like it wants to move higher. What's that look like on the daily ES? Yeah, trying to get back up to blue and climbing. Some bullish folks out there. The Russell. Okay, already filled that 3-point window. Yeah, I don't see anything that motivates me on the Russell, because I don't think we got 2 points here, and I know we don't have 2 points to this high. It's this high, 62.3, 63.4. Yep. And we got stuff back here. Potential resistance. So, and I'm not anxious to do anything with the Russell at the moment. Crude coming back down. Will the pullback hold or not? If it doesn't, now right there where step line, cross trend and falling, and then red turn to blue, that area is definitely potential support. It's an important price, important area. So I would look to sell 68.30 down to 68.20. That's 10 ticks or goal for the day. And on the upside, there's not enough room from this high to this high, so I'm just going to let that go. If a window's below the BBC, you know it's a short. If a window's above the BBC, you know it's a long. Now, when I post them in the discussion group at the beginning of each evening session, I usually put if it's a long or a short, but you should just instinctively know. Prices above the BBC, we expect higher prices. Prices below the BBC, we expect lower prices. Price right now is above the BBC, but we've seen price get rejected. If we trade through the BBC, this should be a really nice little opportunity right here. In fact, I would bump it down just a tad, because you want to clear that low. So now we're looking at 28 to 18. Yeah, still 10 ticks. But you definitely want to clear that low, and then you want to be out or ready to get out when price hits this area, because that's definitely potential support. Gold, what do we got? Let's call it 95 down to 93. $95 to 93. I can't get it all the way down there, but anyway, it's 2 points, $200 per contract traded. Now, as you see price approaching a window of opportunity, go look at your range chart. You don't want to enter a window of opportunity if your range chart tells you there's about to be a retracement in the other direction. You got to learn to work in multiple time frames, and eventually you'll learn to think in multiple time frames. The step line has crossed, so price could find support here at the zone. That's what we expect until proven otherwise. If we go into consolidation, then the BVC will rise to meet price. Or price could just slice through that zone. But it should find some support there. And on the long side, we already got this 4 points that hasn't been touched yet. So that's still valid. And silver, we already did though. It was almost there. And I think it may still make it. So there we go. We've done it all. Price still well off the high of the day. And well off the low of the day. We have a green body. So those employment numbers that come out tomorrow morning at 8:30, those are going to be very important. Now I encourage you to be flat when the news comes out. Let the market react. And then trade the reaction to the reaction. Hope that makes sense. To become a member, send us an email. support@cfrn.net. Just say, I want to become a member. If you're a veteran, say, I'm a veteran and I want to become a member. That's what Valerie's going to do when she gets your email that you want to join. She's going to send you an email that explains everything it means to be a member, to be a passport holder. And she's going to include a link that you can click to seal the deal. And if you're a veteran, we want to thank you for your service. So the link she sends you will have a nice little discount. Okay. The first thing you get as a member is 2 hours of live training every trading day. It's an interactive environment. Michael's putting on, taking off trades, explaining every move he makes, every trade he takes, and the reason why. And you get to see the results right before your eyes. Now, while he's doing that, you're listening, you're learning, you're asking every question that pops into your head. It's rules-based trading. Pretty soon you'll run out of questions. You'll find yourself asking the same question a second time or a third time, and you'll get the exact same answer each time. And that really solidifies in your mind that once you know these rules, all you got to do is follow them. All the heavy lifting's already been done. You don't have to figure anything out. We've spent the last 20 years figuring it out for you. So you got to do is come in, learn the rules, and then follow the rules. We give you the knowledge, we give you the tools, but what you have to bring to the table is patience and self-discipline. 9 out of 10 traders failed simply because they don't have anyone to actually teach them how to trade. That's kind of what sets us apart. 2 hours every trading day, but on top of that, private one-on-one mentoring. All you got to do is ask. Strategy you learn, the indicators you own as a passport holder are fluid across all markets and all time frames. Futures, stocks, crypto, Forex, ETFs, price flows the same across all markets and all time frames. It's from support to resistance, back to support, back to resistance, over and over again and again. It's a never-ending cycle. That's why it's important that you learn how to read the charts so that you know where to expect support and where to expect resistance. Logic 247 is on hiatus, but you will get the concierge trade alerts every evening the second they're published. Monday mornings at 6:15 a.m. Eastern, you'll get the new weekly trading zones. And once they're published, they're carved in stone for the entire week. They don't change in any way whatsoever. And then every Thursday afternoon, you'll get an invitation to attend the members-only workshop every Thursday night at 8 p.m. Eastern. And last but certainly not least, you get the golden key that opens all the private channels in Telegram. Now, we have public channels for people taking the trial so that you can actually converse with our traders, ask them questions. How's your journey been? How long did it take you? Are you really profitable now? You know, kind of questions that other places won't let you ask, right? We do. We encourage it. We want you to. Because we don't want you to just believe us. Believe the people who have chosen to become one of our traders. Ask them. Because they once were in your shoes, blowing up account after account after account, because they didn't have anybody to teach them how to not blow up an account. You'll also get the 24/20 blueprint. Follow it. Everything a trader needs, all under one roof, one low price. No more trying to piecemeal. Well, this thing over here, when I was a member of this room, that one thing worked pretty good. And then when I was at this place, this thing kind of worked okay, you know. And then I've always had this on my chart. Stop. Let go of the past. If it had made you money, you wouldn't be on our doorstep. So wipe the slate clean. I don't care how long you've been at it. Wipe the slate clean. Start from scratch. Learn the rules, then follow the rules. Trading's not easy, but it can be simple. Just send the email to support@cfrn.net. Let us know you're ready to become a trader. Let's wrap it up with our good word for the day. Yesterday we talked about walking by faith. Today, don't be dismissive. Philippians 2:4. Let each of you look out not only for his own interests, but also for the interests of others. If you're in a position of leadership, and that could mean even in your home, you're the dad, you're the priest of the home. And I know there's a lot of single moms out there, you're both mom and dad. So whether it's in the workplace or in your home, if you're in a position of leadership, try to be very much aware of how you respond to the feelings, thoughts, and opinions of those around you. What you say as a leader will resonate more deeply with people than what others say. So you must be sensitive to this. Even when someone offers an idea that you feel has no merit, resist the temptation to just immediately dismiss it. A simple "thank you for your input" is called for. Not, "no, that won't work." When you're dismissive towards someone, it sends this message: I'm ignoring you and your idea. Your feelings and views don't matter. Your concern is unimportant to me. But you see, other people's feelings, even though you don't feel that way and you don't think they should feel that way, if they express to you that's how they feel, now you got to deal with it from that perspective. Because to them, their feelings are just as real as your feelings are, even if they're completely opposite. Catch more flies with honey and vinegar. Spoken or unspoken, these kinds of statements that I just went through, they damage a person's sense of value and need for respect. We all want to be respected. We all want to be valued. This is particularly true if the person thinks they have earned the right to special regard. The old saying is true: people don't care how much you know until they know how much you care. When you're dismissive towards others, they will find a way to display their irritation. And sometimes it's in a way that can cost you dearly when it comes to fulfilling your vision. You can avoid this by becoming more aware of how you come across to others. The only solution to this problem is to step outside yourself, listen intently to others, and endeavor to understand and respectfully handle their concerns. You'll gain great benefits if you do. Let each of you look out not only for his own interest, but also for the interest of others. And there's an old saying, I'm not my brother's keeper. Well, yeah, you kind of are, especially if you're in a position of leadership. And that's our good word for today. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell.
Remember this: there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading E-mini futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.